Awesome!
What is debt consolidation?
I don't know! Tell me!
Debt consolidation is a way of paying off your debts without declaring bankruptcy. Instead of managing a few high-interest rate loans like credit cards, people can consolidate their debts using a single personal loan with a lower interest rate to pay off that debt. Benefits of debt consolidation.
What are they?
The main benefit is paying less every month. By using a personal loan to pay off other high-interest rate loans, you spend less on interest payments every month and you reduce how much you spend over the lifetime of a loan. It also makes things easier to manage. Instead of writing multiple checks to different financial institutions, you write one.
Ah, sweet!
Debt consolidation options. What are the first steps?
Be positive.
Shop around for the best loan. Once you're approved and get the money for your debt consolidation loan, pay off your existing loans.
Boxes!
Here's how to quickly determine if debt consolidation loans are for you. List all your debts on paper, including mortgages, car loans, credit cards, etc. Next to these debts, write down the interest rates and how much you still owe. Determine how much you're paying each month, whether you're paying down the principal, paying just the minimum payment, or less and getting penalized. Figure out the total amount needed to pay off your loans. Use our debt calculator to help.
Calculate!
If you find a comparable loan with a smaller interest rate, a debt consolidation loan might be for you. If you can't, don't worry about it. Other options are available. These include debt settlement and credit counseling. Debt settlement. Debt settlement is a legal way to pay less than you actually owe.
What?
You reach an agreement with your creditors that sets a more reachable target payment that will satisfy your debts. Creditors agree to settlement because some money from you is better than nothing. How debt settlement works.
I don't know! Tell me!
First, you select a debt settlement company.
I picked you!
This company negotiates with your creditors to reduce your total amount of debt. Once in the program, you pay a specific amount per month to the settlement company. They hold your money until there's enough to satisfy your debts and pay the fees. How long does this go on? Generally speaking, it takes 2 to 4 years to finish and be debt-free.
The sun!
What to look out for? Be sure the company you choose to work with doesn't bill for fees before a debt is settled.
Give me your money!
Claim they have access to a new government program that helps consumers out of jams.
I promise everything!
Make guarantees that your debt will be eliminated.
Don't pay anything!
Tell you to not ever communicate with a creditor.
Don't talk to those guys!
Promise they can halt all calls from debt collectors and end any lawsuit.
I still promise everything!
Good debt settlement companies don't make promises they can't keep. They work to help their customers get out of debt by helping you pay less.
I love this!
Credit counseling is also another good option. Credit counseling involves working with a credit counselor to reduce your debt and develop good spending habits. These counselors are trained in budgeting, debt management, spending habits, and financial education. They'll help you find the best way to handle your debt. Meetings between a credit counselor and a client are considered confidential.
Because I'm broke!
When you meet, be prepared to tell everything: your income, household expenses, existing debt, and spending habits. Don't worry, they are generally very understanding and won't judge. Simply complete our secure online form for a free savings estimate and to be paired with top debt relief experts now. It's time to be debt-free.